Thank you, Sarah and David. Welcome to the Halftime Report. I am Frank Holland in for the Judge Scott Wapner. The record is front and center as tech earnings drive stocks to fresh all-time highs. Microsoft and Meta delivering in a very big way as we now turn our attention to Apple and Amazon. So what's riding on these high-profile reports, and is it time to double down on the tech trade or make a different move? The investment committee's right here, ready to debate that and much more. Joining me for the hour, we got Josh Brown, Jenny Harrington, Bill Baruch, and Malcolm Etheridge. Full desk here at Post 9, but first we check the markets. As we mentioned, the S&P and the NASDAQ hitting at new all-time highs. The Dow pretty flat, muted, up just very fractionally. The S&P up about 0.5%, the NASDAQ up nearly 1%. And with that, I turn to you, Josh Brown. What do we do from here? What do you make of this rally that we're seeing, obviously today fueled by big tech earnings, very strong reports from Microsoft and Meta, also just giving a lot more optimism when it comes to the broader AI trade?
This is one of the strangest times I can ever remember in my 25, 28 years, whatever it is, of doing this. And every one of us every morning should wake up and say, thank God for the AI CapEx story, because it is literally the only story in town. We learned this week that GDP growth in the first half of this year was only 1.5%. Not terrible, but last year at this time it was 2.5%. And then when you look at the components of what's happening in GDP, there are tariff impacts. Those impacts are not positive, FYI, if you weren't sure. But the amount of spending on IT is just so through the roof that it's overshadowing everything. And last night is such a great case in point. You look at the numbers from Meta, you look at the numbers from Microsoft, and then you look at the commentary from management, and it's like these companies are living in their own world, given what's needed in this cycle. Number one, they're executing, but number two, the demand just seems endless. I pulled out a couple of things that the desk can discuss that I thought were really notable. On Microsoft, cloud was up 23%. Unbelievable. At this stage in the game, to still be putting up numbers like that. Azure revenue growth was 34% higher than the same quarter last year. Copilot apps have now surpassed 100 million monthly active users. Microsoft says over 800 million monthly active users utilizing their AI across all of the various products. These numbers are obviously absurd. It's the fastest rate of growth for anything that they've launched on the enterprise side. Even LinkedIn had 9% revenue increase. And then the guide for CapEx. They're now guiding to a number almost 40% of revenue for next year, just in pure CapEx. And to put that in perspective, it's like a double or a triple over a couple of years ago, depending on when you want to put the starting point. So when you're seeing something like that from the second largest market cap in the S&P 500, and you're seeing the resulting move after the close, and we could do Meta later, and then you look at everything else that's happening with all different mainstream related stocks, many of which are hitting 52-week lows. It's just incredible how stark the difference is between companies involved in AI CapEx and companies that aren't.
All right, why don't we continue talking about Microsoft? Malcolm, I'm coming over to you. You're a Microsoft shareholder. Obviously, shares are up big. Josh has some of the highlights. I want to go on that CapEx number he was just talking about. $30 billion for the current quarter, a 50% increase year over year. Also, the 100 million users of Copilot. What does that make you think about this stock? Do you feel like it still has more room to run? Obviously, there's a lot of price targets increases out there as well.
Yeah, I think the stock still has more room to run because it's unlikely. It probably goes without saying, but as long as we keep getting these record-beating earnings numbers out of these mega cap tech companies, they can continue to make these large announcements at earnings about future guide, right? It's obvious. The cloud cover for continuing to spin this way is delivering quarter after quarter. So for Microsoft, it doesn't really scare me necessarily for them to say we're going to double down on what we're going to spend. We were, if you think back to January, we were questioning whether it made sense for Microsoft to be talking about spending $80 billion on future investments in AI, and then they came out and effectively said if we extrapolated across the next 4 quarters, $30 billion a quarter, we're probably talking 120 now, and the street rewarded them instead of being fearful the way we were back in January and February when DeepSeek hit the scene and everyone said, oh my God, they're wasting so much money, why would they keep investing this way? And so I think as long as Microsoft and others continue to manage to outperform, there's no reason to expect that the trade is going to go the other way. But the moment that it looks like there's a chink in that armor, we have to imagine that trade unravels very quickly.
All right, I want to switch gears over to Meta as well, one of the other big gainers today. By the way, Microsoft and Meta both up about 50% from their April lows. Jenny, you own this company. I thought it was interesting. They only raised the bottom end of their CapEx guidance. It was $2 billion, so obviously a big jump on the bottom end, but only a raise from the bottom end. Were you surprised by that? I want to get your take on the report.
No, we weren't really surprised. So we've owned this for 9 years now, and we paid 116. It's up 600%. The number, it's one of these things that we're constantly saying, should we trim, right? Is CapEx getting too aggressive? Are they spending too much? Is their fiscal lack of discipline starting to creep back in? And so far, so good. So one of the reasons we haven't trimmed is we very much expected this quarter. We expected good numbers, but where we sit today is that it's finally kind of expensive. It's trading at 27.5 times. For the past 2 years, I've been saying, why do we own Meta of all the Mag 7s? Because it's the only one we own. Why? Well, it was trading at 20 times and it had 20% plus earnings growth. Now it's got high teens to low 20% earnings growth ahead, trading at 27 times. The free cash flow yield's down to 2%. And that's a function of all that CapEx spending in addition to everything else that they're doing. So it's just getting rich. I think it's something that we are going to
You think it's getting rich. You have it at 27.5. I think our system has it about 29. But I'm looking at Microsoft at, basically 36.
Well,
Bill,
I don't know Microsoft.
No, I'm just going to Bill, too. Is Microsoft too expensive? It trades at about 36 times forward earnings. Jenny's saying 27.5, 28's too expensive.
Well, Microsoft they've embedded themselves up and down the AI supply chain, from data centers to implementation to software. I think right now it's really tough to sit there and say a valuation matters as a reason to be in or out of the stock. One of the things I'm looking at is, where is Microsoft relative to the Qs? And it is not even at a record high of its relative to the Qs. So it still has room to go. Today it kind of closed in on it when it opened up higher. Maybe some of the CapEx spend is the reason why it gave up some of its gains. But I think what we're seeing here, it being an AI arms race, they have to spend. They're embedded in the up and down the supply chain, and I think it's a name you have to own. We own it. Just a touch under the benchmark, but it's been a staple in our portfolios.
Really quick, Josh, I want to come back to Jenny for a second. Yeah. So you're concerned about their spend. It sounds like you're saying they're spending a lot. Actually, some analysts came out with notes today. HSBC, one of them, saying maybe they're not spending enough because if they spend more, they can try to monetize WhatsApp, perhaps turn it into customer engagement. In some countries, if you've ever been overseas, when you try to do customer service, you do it through WhatsApp. So any thought that maybe they're not thinking big enough when it comes to AI at this point?
Here's the thing. Nobody knows the answer to that. And anyone who pretends they do is just blowing smoke. Nobody knows whether we're spending enough or not enough. And only time will tell on that. We know that they're spending a lot. And so for us, where we have a very strict discipline, which in our growth strategy, it needs to be a 5% or better free cash flow yield, it always brings us back to valuation. And I will always say, even when things get crazy, valuation matters. It acts as a safety net. So Frank, maybe they're not spending enough. Maybe they're spending too much. Nobody knows.
All right, really quick, I want to go to Figma right now. Just had its first trade not too long ago, I believe, trading between 95 and 100 right now. We're taking a look. Yes, right now between 95 and 100. Offering was at 33, so obviously big upside from there. Again, awaiting Figma's first trade. It could be between 95 and 100 indicated right now. And with that, we also want to go to a news alert. We have our Christina Partsinevelos at the NASDAQ. Christina.
Well, according to China's Cyberspace Administration, NVIDIA met with Beijing officials just today regarding potential national security risks with the particular H20 graphic processing units, GPUs, that were being sent to China. Washington, just not too long ago, allowed NVIDIA to resume the sale of these chips to China, reversing an effective ban. The reason why I'm bringing this up right now is because you have China looking at security risks around these chips, and now NVIDIA has provided me with a new statement saying, quote, cybersecurity is critically important to us. NVIDIA does not have backdoors in our chips that would give anyone a remote way to access or control them. That was the concern for China. If these chips end up over there, that possibly NVIDIA could shut them down remotely. And so NVIDIA is denying that, saying that there's no backdoors within them. Guys?
And with that, looking at shares of NVIDIA right now, up just about 1%. Christina Partsinevelos, thank you for that news alert. Josh, I'm going to come over to you. You're an NVIDIA shareholder. Yeah. Were you concerned about, it's only a couple of hours to be concerned about it. The news broke overnight. Were you concerned this might be an issue for NVIDIA, and maybe some of the pop that we saw after they could sell, some of those gains might be lost if they weren't allowed to sell in China anymore?
It's always a concern, and of course, like in a perfect world, NVIDIA finds a way to work with China that does not threaten the national security position of the United States or risk the ire of one side of the aisle or the other in Congress. It's very tricky to be this size as a business, to be this global, and to be this important to literally the global communications and internet infrastructure, and not run up against various political issues from time to time. But I think as a long-term shareholder here, the smart play has always been to just say, whatever the right thing to do is, Jensen will ultimately figure it out. It's been the story for, I don't know, the 11 years I'm in the stock. I don't see why that will change. I have no edge on what's going to happen with the H20. I just think that the company has a really good track record of getting around these kind of thorny issues. I just want to go back to Meta for 1 second, because I think there are two things here that are really interesting. The first one of those is the sheer scale of the user base. They're telling us now that 3.4 billion people with a B are regular users of Meta products every day. So whether it's WhatsApp or it's Instagram, these numbers are unheard of in the history of humanity. And so from that perspective, maybe the stock is too cheap. How many companies can you think of that command that size of the overall human population on the planet and have the ability to market to them in a highly specialized way that literally no other company that exists can do? It's a really special situation. I'm not sure why we would expect it to sell at a market multiple, given that power. There are 8 billion people on Earth, and 40% of them are being reached by this company every day, most of them multiple times per day. I don't know, what should that be? Should that be a 20 multiple?
I would say that too. Impressions served up 11% year over year. Average price per ad up 9% year over year. And you got a stock that is literally breaking out to all-time highs, and you now have a defined floor at 740, that previous all-time high. Listen, I'm not saying you need to chase it today, but if it comes back in, there is a well-defined support. And as you talked about, the numbers are phenomenal here. There's a reason why you have basically a $2 trillion stock that is up more than 10% in a single day.
So can I just riff off of Josh's comment? You said, and the AI stocks, which is Meta 2, are overshadowing everything. And then when you say overshadowing and then 3.2 billion users, one of the things that I'm starting to worry about is it really overshadowing, or is the AI and Meta play actually sucking the life out of everything else? And that's what I worry about, is are all the investment dollars and all the investors going to the Metas versus the kind of the rest of the economy? Is all the money flowing there? This is something. Sorry,
and the top talent going there too.
Everything's going there, and it's an interesting thing from like a more existential thought, which is how does it work when half the world is using Meta's products, and they're getting all the dollars?
Meaning, what aren't they using?
No, not really. Just like how do you invest in that environment when all the dollars?
The thing is,
you mean all the investor dollars or the ad dollars?
Everything.
Okay.
Investor dollars.
Well, the ad dollars though are coming
okay.
from every other sector of the economy that needs to advertise somewhere.
But let me give you an example. So like, here's a doozy in my portfolio, Whirlpool, right? And I was reading an expert report the other day, and it's saying like, look, Whirlpool isn't investing in their technology as much as they should. Of course they're not. Investor dollars feed into the companies that then use that to invest in technology. All the dollars.
You don't want AI bathtubs?
I would be actually fine with what.
But Jenny, I think you raise a good point, because you and I, by the way, happy birthday today.
Thank you. No, Tuesday.
It's Tuesday?
Yeah,
okay.
Tuesday.
For the viewers,
thank you.
Jenny's 30th birthday is coming up.
That's right.
You and I lived through the first version of this in 98, 99, where the investor class basically said, I really don't want to hear about anything that's not related to the internet. It's not that there aren't opportunities. It's a game where you say to yourself, yeah, but other investors aren't going to come and buy this stock from me higher, because they only want to buy one thing. It's not healthy. We get to that point, and I think the top 5 market cap stocks now, all AI, spoiler alert, I think they're equal to the market cap of the bottom 430 S&P 500 names. That's absurd. And the problem is, it was absurd when they were equal to the bottom half of the S&P 500.
And what happens to the bottom half of the S&P 500 if all the investor dollars, all the attention only goes to
think about how to talk about AI.
Isn't the question, is this a bubble?
Is
this a bubble? Whether it's just a speculation, investor bubble, or confidence bubble. In fact, Wolf came out with a note titled "All-Time Highs, All-Time Worries," basically saying the seeds are potentially being sown for a bubble to form, or at least for a run-hot economy over the next 12 months. And Josh, if you don't mind,
but the earnings are there. That's the thing.
But we were talking about this before, and Malcolm, I'm going to get you to weigh in. You were also talking about some of the other companies that we used to see as bellwethers are doing very poorly. A UPS, a Nike, and we're not paying attention to that because we're so focused on this trade.
Give me a chart of UPS This is the worst chart in the Dow Jones. So this is a quote-unquote bellwether of the quote-unquote real economy. Guys, give me like 10 years, please. 5 years, something.
Do five.
Do five.
It's not doing good today either. So I mean, I think it proves
the point is this stock goes down every year. It's like one of the most obvious things to bet against. I wouldn't blame AI for this not working. My point is nobody seems to care. Chipotle is a falling knife. Nike's been horrible. Starbucks horrible. And these are companies where when they used to report, we would be like, ooh, the health of the consumer. Forget it. Nobody cares.
I think we got a glimpse.
They keep going lower, and AI keeps bailing out the rest of the stock market.
I think we got a glimpse of what the market kind of wants to do right now, and a pullback would be very healthy. I think it gives a little bit of sort of refresh. And after the Fed yesterday, you saw the odds of rate cuts get pushed all the way out. There was a 60% chance that they were going to cut twice this year. Now it's 40. There was a 67% chance they were going to cut 25 basis points in September, and that's now something like 40. The dollar's been rallying. There's a big short position in the dollar that's unwinding right now. That brings pressure to asset classes. You saw the S&P literally close near the lows, came off the lows, probably because no one wanted to be short or people wanted to make sure they were positioned ahead of Microsoft and Meta earnings. And then you had two companies, a $2 trillion, a $4 trillion, basically, report with great reports and moved the entire market up 1%, the entire S&P.
Yeah. To your point, the dollar's actually having its best, on pace for its best month since September of 2022. So you are seeing a bit of a reversal in that trend, the year-to-date trend. And speaking of reports that could be market movers or inflection points, Apple, one of the names reporting after the bell today. Following some of Steve's comments about Apple after the bell, I'm going to go over to you, Josh, you're an Apple shareholder. Is this a tense moment for Apple shareholders? I mean, especially after these blowout reports from Meta, blowout reports from Microsoft, blowout reports from Alphabet. Is there potentially an inflection point for this stock to take a serious downturn just on disappointment?
I don't think this time. I mean, anything could happen. My bet would not be a serious disappointment. I think the shareholder base is already disappointed, and they've been disappointed for a long time now. The last quarter, Apple reported with cash flow growth in the double digits on a year-over-year basis was all the way back in Q1 2024. Here are the numbers over the last 5 quarters, and this is why it's hard for them to disappoint. Negative 1.5%, positive 0.46%, positive 3.6%, positive 4.1%, positive 6.1%. That's EBIT growth year over year. These are not great numbers for a Mag 7. The thing is, this is the only gigantic company that is almost adamant about not raising CapEx. Full CapEx spend this year is supposed to be $11 billion. For Apple, it's literally pocket change. You're talking about a company with hundreds of billions of dollars at their disposal to do whatever they want with. And what they seem to want to do is a buyback, tiny dividend, and just business as usual in the midst of all of their competitors going absolutely crazy. 20% of revenue, 30% of revenue, Microsoft almost 40% of revenue, and Apple's not doing it. Yeah. And so if you want to be a contrarian in the Mag 7, if you want to pick the one company that doesn't believe they need to act like this, buy Apple. Yeah. And from a disappointment standpoint, no one's expecting anything. It's a no-growth business. We all get it, and yet we're valuing the stock here anyway because of the stability.
You said it. Yeah. No one's expecting anything here, and that's the kind of thing I like. Now, I'm not sitting here and adding Apple right now. We're really well underweight Apple in our portfolios. We've got a weighted 3.5% in our portfolio. I want to buy Apple. I'm thinking that, listen, they underwhelm, but a lot of the negativity is priced in. Actually, today, it is making a new low against the NASDAQ on a relative basis, against the Qs, the lowest it's been relative to the Qs since the summer of 2020. I would like to see Apple 195, 190 range. I would probably we'll double my position in it and get it up to
if it falls down to 195.
If it falls down to that range.
Malcolm, I want to come to you. By the way, can we show a year-to-date chart of Apple right now? You were talking about stocks that are potentially falling knives. If you look at the year-to-date chart of Apple, it's down double digits year to date. Malcolm, I'm going to come to you. Are we sure this isn't the next falling knife? Steve Kovac hit on some of the tariff impacts, just some other issues with the company, innovating when it comes to artificial intelligence. When you look at this chart, are you seeing signs of a turnaround coming in the near or the even medium term?
Yeah, I think rather than listening to this earnings and finding out how many fewer iPhones they sold in the past quarter versus the previous one, what really is going to matter for Apple shareholders in the near term is that any day now, a judge is going to deliver a ruling on whether Google gets to keep paying them to be the dominant search engine on their platform. And that's what's really going to matter, because just that one payment alone represents something like 10% of Apple's earnings. So that going away probably does get you into the 190s range, into the price target that a lot of folks like me have been looking to add additional shares of Apple to their portfolio. But to me, if I'm Apple and I really want to free ride on what the momentum is right now, I'm not necessarily chasing AI. I'm looking at what's been happening in stablecoins and fintech, and looking at the fact that 2 billion people are walking around right now with my devices in their pocket and maybe figuring out a way to tap into some of the money they've spent on things like Apple Pay Later and others, to add in those additional fintech features that would just be a thing to bridge that gap until people are really ready to upgrade for those AI features. Because if you were able to really tap into the Apple Wallet a little bit more, that goes to the services revenue, and that buys you time for people to stop questioning whether they should continue to hold your shares.
All right, I understand the thesis on a possible new line of business, but go back to the Alphabet part. So they lose, I think it's $20 billion in annual revenue if the judge rules against them.
Yeah.
And the stock falls down to 195, and that makes the company more attractive, Bill? Because you were doing a lot of nodding over there. What makes the company more attractive after they lose $20 billion in annual revenue?
Well, once the news is baked in, I mean, right now, they're already pricing in, like, not growing revenues to the extent that they have in the past. I mean, a lot of the negativity is being priced in. And I come from the school of, if all the sellers have already sold, who's left to sell? So I think a lot of that's really been baked in. And if they lose that revenue, the market's going to react. That could get us to 190, maybe a little bit lower real quick. But I'm looking at 190, 195 on a technical basis. There's a nice little uptrend that it's hanging. If it trades lower here, it's got to get down in that range. Negative news on top of that could exacerbate that downside, but I'm sticking with my guns, and I would look to be a buyer of Apple.
We also have Amazon reporting after the bell. Josh, you own this one. Obviously, the #1 cloud player. After blowout cloud results for both Alphabet and from Microsoft, it seems like there's a lot on the line when it comes to AWS and being able to not only meet the expectations but exceed them.
Yeah, we wrote this up as part of our Best Stocks in the Market series at CNBC Pro this morning. I own the stock. It's on our list. This is still below its February high. So if you go back to February 4th, the company was 2 days away from reporting earnings at a record high, $242 per share. Reported that number. The market didn't like the guidance. It was a good report, but the stock fell 4%. And then we got into the whole tariff trade war stuff, right into the teeth of Liberation Day. And this stock was in a massive drawdown. What's happened since April is a 25% recovery in the share price, almost back to those February highs, not quite through. What we wrote today is that if tonight's report shows they've been executing, which I think they have, you will see a new record high for the stock finally, after it spent the last, 5-6 months sort of like in a purgatory. I think the big number here is going to come out of Amazon Web Services, as it always does. The most exciting part of the story to me is the backlog of $189 billion, which I think is really the part of the Amazon story that should put it in the same conversation when we talk about Microsoft and Azure. It's a gigantic business. AI is going to be supremely important here. They are positioned to deliver AI services to more customers than anyone else other than Microsoft. And I don't think that that's really in the stock's price right now.
What's interesting?
So last thing, 36 times earnings, the lowest multiple you've ever been able to pay for Amazon's earnings since the company came public. Literally, it has never been. So I understand it's not growing as fast as it did 10 years ago. We all get that.
Right.
But you have never, ever had the ability to buy it at this valuation.
Guys, we got to leave the conversation there. Amazon shares up over 2% ahead of earnings. Coming up next, I want to get the desk reaction. Josh, I'm going to start with you. What did you make of what he said specifically about private credit?
Look, this is a business that the mainstream, systemically important banks were pulled away from as a result of regulation a generation ago. The question now is whether or not that still makes sense. And in the meanwhile, the banks are not waiting. They're not watching this whole parade go by and not trying to do anything about it. So they're going to originate some of these loans. They'll sit in the middle of some of this stuff. Maybe they'll be on the servicing side. And now their wealth management clients are being pushed into a lot of private credit firms that are being run elsewhere. And so they're raking in fees as a result of that. They're finding a way to get involved in this market because it's a really big market and there's a lot of potential here. Do I worry about it? Yeah, I worry about everything. So this is just like one more thing on the list where people are maybe putting on a lot of leverage or taking more risk than they otherwise would because of how safe this asset class has now been deemed.
The bill. Oh, sorry. Go ahead, Mike.
I'm just thinking the question is, does it belong in places like a 401k, right? If we're talking about a market where potentially folks could get wiped out as that stuff makes its way from the super top tier, ultra high net worth investor who now needs liquidity, and so we're coming on down the food chain. It's making its way into 401ks, which is most people's largest liquid asset. I have concerns there about the illiquidity where it started, making its way to average.
It's very saturated. But I mean, they're making money on it. They're making money on trading. I mean, the volatility has been big, but even with low volatility, these companies are making more money on trading. I think that's big. And then the M&A, mergers and acquisitions. I mean, Figma going public. These IPOs, this credit, this stuff is actually going to really be a tailwind, I think, in the second half of the year.
I mean, really, today's really the stories about the capital markets. By the way, still looking at Figma. We're going to show it right here. I believe now it's indicated to open at 105 to 110. So again, it keeps moving up. Just want to get your take, Jenny, just on the capital markets, the idea of the IPO pipeline opening back up again. This is one of the bigger tech IPOs in recent months.
I just wrote Josh a note that it smells like 1998, which, by the way, I love that smell. But it's been a long time, right, since you saw priced at 30, opening at 105. I think it's good for the market. I think the more money and the more companies that come into the public markets, the better. One of the things that Jamie Dimon wrote about in his annual shareholder letter was how there used to be, I'm going to get these numbers all wrong, there used to be, like 9,000, all these numbers. There used to be like 9,000 or 8,000 publicly traded companies. It's a fraction of that. This is a wonderful market that really allows everyone to have access to. So the more IPOs, the more access people have to great companies. Can I riff one thing on the private credit? What's a really nice way to get private credit? One of the companies that I own, the name is Sixth Street Specialty Lending, and they reported earnings last night. Fantastic earnings, supported the dividend, paid a special dividend too. But there are publicly traded companies that invest in private credit. You can just buy those. You don't need structured products or wrapped up, fund of funds to get them. There is a whole bunch of publicly traded companies that transact in private credit, and it is a great space to be in.
We have to move on, but to your point, Jamie Dimon said years ago we had 8,000 public companies. We're down to 4,000.
That's what it is.
And he says, some of the regulations have been onerous, stopping a lot of these private companies from entering the public markets. Obviously not impacting Figma. Big showing here at the New York Stock Exchange. Again, the IPO priced at 33 a share, indicated to open right now between 105 and 110. Hey, welcome back to the halftime. We got some committee moves. Josh, you're buying some more Shake Shack.
Yeah, they reported a great quarter. The problem is the stock's up 100% going into the print from the April low. It was literally 72 and ran to almost 150. So today it's giving back some. But when you actually look at the numbers, they were really fantastic. And Rob Lynch is doing everything that this company brought him in to do. Earnings were 44 cents per share, which beat the analyst consensus. Revenue was $356.5 million. That was above consensus. That's up 12.6% year over year. Same Shack sales were up almost 2% year over year. System-wide sales up almost 14%. And restaurant level profit, which I think is one of the key numbers for a company like this, hit $82.2 million, which represented almost 24% of Shack sales. They say Shack, not store. But the key thing here is the expansion plans are well underway. Margins are improving both at the corporate level and at the store level. And everything that they laid out as their goals when Rob came into the company, they're either on schedule or ahead of schedule. And as a result of that, I'm going to remain a long-term shareholder. Anytime a stock comes down 19% for no reason, for me, I have to add. So that's what I did this morning. It's already looking like a smart decision.
All right, Shake Shack shares pulling back about 13.5% right now. Malcolm, I'm going to come over to you. A stock that's actually down year to date, PayPal, and you're selling right here.
Yeah, they had a decent earnings. Stock's off, 20% or something year to date at this point. I initially bought it just on the expectation that Alex Chris, I think he was in the job for about a year already when I bought the stock, and I figured he'd figure out a way to squeeze some juice out of the Venmo product. It's very rare that a company manages to jump from proper noun to a verb, and Venmo's in that rarefied air. But they just haven't really figured out a way to do that. Everything's been focused on click to pay and branded checkout, and that just doesn't really excite me as a shareholder. There's a number of other fintechs that I could own, I do own, and so I just decided it's probably time to pull the plug here, spend those dollars elsewhere.
You just can't get people to pay for Venmo is the bottom. They try to do pay by Venmo where the vendor, like the e-commerce site, they would pay them something. There's very little uptake on it. And peer-to-peer, nobody's going to pay for that because Zelle is free.
Call it Venmo.ai, and then we'll start to...
We got one more committee move to get to very quickly. Bill, you're trying to play some of these trade deals with Cheniere.
Yeah, Cheniere. So you have a trade deal with the EU. And we sold Cheniere a couple months ago, kind of with a lot of uncertainty surrounding what was happening around the April tariff announcement. We have a trade deal with the EU, and Trump is really aligning these deals with investments in the U.S. as well as energy. And if we're going to start to see energy being, the EU committing to energy, there's no one really in a better place right now than it comes to somebody that's exporting LNG. And these terminals take years to really implement. So I think what we're also seeing is sanctions on Russia. We're going to really see a need for LNG imports from the U.S. into the EU. I think Cheniere is very well positioned for that.
All right, Cheniere shares up just about 1.5% right now. All right, coming up next, and we are back on halftime with final trades. Malcolm, you're up first.
Yeah, I'm going Dominion Energy. We've been talking all show about increased capex from all the hyperscalers. That also means additional chips to build out data centers, but that's got to flow to things like energy and cooling.
Bill.
Agnico Mines, they reported a beat. They also almost doubled their free cash flow from the previous quarter. And what we're seeing here is a divergence from the weakness in gold. And so I think gold's come back the second half of the year, and that opens the door for some really good strength there.
Jenny?
Ethan Allen, good earnings yesterday, good enough to issue a special dividend of 25 cents.
And Josh?
Shake Shack, staying long.
That's it? We got 10 more seconds. You got anything else?
Super long. I don't know.
All right, that's going to do it for halftime.
Hello, everybody. I'm George. Welcome to Blue Cloud Trading. It's Thursday, July 31st. It's after the close. It's 4:45 p.m. We've got all the earnings announcements out from Apple. And so let's take a look. We're going to take a look at a bunch of things here, including Apple in a few seconds. But some of the stocks that they talked about on the show, we're going to discuss those on the halftime report. That was Josh Brown and some guests. There's about 11 stocks and ETFs that we're going to cover from the show, not all of them. We're going to cover the SPY, the QQQ, the index ETFs, which aren't looking that particularly good today. I've got to be honest with you. We're going to look at all this, and we're going to look at the after hours performance too. So let's get into this right away. It's very important. This is the one-day performance, but let's first take a look at the indexes, okay? And here they are. This is how they closed. They were all down today. Not surprising, down 0.74% for the Dow, NASDAQ down 0.03%, S&P 500 down 0.37%, and the Russell 2000 down 0.98%. So there's certainly, some issues here because we've got, again, August 1st, tomorrow, like I've said before, the volatility is starting to come into these markets right now. There's a little bit of fear, and that will cause people to close out of positions for sure. It's not just the fear element, it's the uncertainty element of not knowing exactly where things are going to end up as far as the tariffs go. And you probably heard there's a 90-day extension on Mexico at 25% tariff. That's a thing that just came out. And there's, we're going to find out more information, I guess, tomorrow. But it's a kind of not an ideal trading environment. Let's just say that. Here's the heat map, okay? This is how the stocks closed at the end of the day. Microsoft was up 3.95%. Amazon was up 1.7%. Meta was up 11.25%. They came out with earnings yesterday. And Tesla was down. Look at this. All the healthcare stocks, the majority of them there were red. A lot of the financials were down. Utilities were one of the few bright spots. The industrials were kind of mixed. Now, let's look at the after-hour performance, because right now we're looking at how they closed at the end of the day, right? So as I mentioned, right now it's 4:48 p.m., as you can see right here at that little, up here in this little time thing. And here we go. Let's go to the after-hours performance, and there it is. So Apple up 3.09% after hours. They did beat expectations. But it's not really taking off as I thought it might. Amazon, if it was positive. Again, I think the tariffs lingering are going to be a cause of concern. Amazon down 2.59% after hours. Okay, so let's look at that again at where it was right before the market closed. Apple was down, Amazon was up, it reversed after hours. So, what are some of the ETFs that are doing okay right now? Well, you can see that the indexes are down. And when that occurs, the inverse ETFs tend to do pretty good. The SQQQ, for example, was up 1.77%. SOXS was up. These are inverse ETFs. That one right there is the Bear 3X for the semiconductors, down 9.35%. Not good. All right, let's take a look at the charts now. We're going to use Ichimoku, folks. We're using the Ichimoku indicator. This indicator has a very long history. It was incepted originally, in the late 1930s. It became published in the late 1960s to the general public, and it basically, a lot of financial institutions still use this indicator today. It's Ichimoku in Japanese stands for at a glance, and at a glance we can see what's happening here in the market. And that's important when you're looking at the charts. Now, let's zoom in a little bit. And what you'll notice is that for the first day now, since back here, June 20th, price has actually closed under the Tenkan-sen. The Tenkan-sen is this 9-period green line that you see right there. That's the midpoint of the last 9 periods. That's a significant first weakness here in the Ichimoku. It doesn't mean necessarily that this is, it's all going to collapse all of a sudden. It just means that there's weakness. And so when the market is looking weaker, it's not really the ideal time to be adding new positions. You want to wait for the strength to come back in. Generally, that happens when price gets above it, like it did right here, after that little pullback, for example. And it might be a short pullback here. It might be we might have a complete reversal tomorrow. Who knows? The market's very unpredictable. But what the good news is, we can see what's happening with our eyes. We don't have to really trust what we're hearing on the news or whatever. You can see exactly what's happening, and that's the idea behind technical analysis for those of you who are interested in learning about it. Now, a couple of other things that you'll notice here. The volume these last 4 days has been increasing, but it's not increasing in a positive way. You can see that these last 4 days we've had 4 negative candles, and the fact that it closed under the Tenkan-sen, that's important. So now what? Let's take a look at the weekly chart. Weekly chart is still in effect. It's still in a strong uptrend on the SPY, but the daily is not looking good. QQQ ETF on the weekly starting to develop a reversal candle. On the daily chart, the Q's down 0.53%, also got under the Tenkan-sen. Let's keep going. Dow Jones DIA ETF. All right, let's look at that one. This is the second day now. Second day that it's under the Tenkan-sen. Now the next level is the red line here. That's the 26 period moving. It takes the midpoint of the last 26 periods. So that's where it might find a little bit of support. And it's still above the cloud. So overall, everything looks bullish still. However, these last 4 days are bearish. As you can see, the volume is increasing in all these indices. Here's the weekly chart. Here's another important thing to keep in mind. As I've mentioned before, you've got to look at prior levels of resistance. And how do we identify these? We look at prior highs. Right there, right there, right there. Okay, notice how every time price got to that level of $451, it dropped. Came back here, dropped. Bigger drop, in fact. Came back here. Now we've got a bearish engulfing pattern. See this red candle? See how it's engulfing the smaller bullish candle? That is bearish. Let me show you guys on the candle pattern reference sheet. And by the way, you can get this for free. At the end, I'll give you guys instructions on how to get this for free. Basically, what you want to look at, is under the double candle patterns, under bearish here. And there it is, bullish engulfing. Small bullish candle followed by a red candle. It shows us that basically in the early morning, price gapped up. And then, but by the end of the day, the bears took control. They pushed the price down. It closed under the prior day's opening price. And that's precisely what we've got right here. Okay? So, price right there. Okay? It got about the same level, but it's engulfing it. And then it actually closed down under the prior day's opening price. That's not good. That's a weekly, by the way, that I'm showing you. So that's on a weekly chart. That's what's developing right now, and we still have one more day before we know exactly what this candle is going to look like on the weekly chart. So just keep that in mind, okay? We've got Friday still. Russell 2000 also developing a bearish engulfing pattern on the weekly chart and inside the cloud, okay? Here it is in the daily chart. So it's looking weak here. Finding support at the key at the 26 period. So that's, I suppose, one positive aspect. And that dotted yellow line that you see right there, that's the 200-day moving average. So it's still holding up above that level. Look at the VIX, up 8.2%. And as I mentioned, expect that. The last time we had the tariff announcement was back here in April. Look at the spike that occurred here. It was a huge spike. And although we kind of know somewhat what's happening with the tariffs, there's still a lot of it's all over the place. There's no real true. I don't think that we're going to have any information that we can rely on 100%. Why? Because, as I mentioned earlier, he just extended the tariffs once again for another 90 days for Mexico. So if he did that with Mexico, he's probably going to do that with other countries too. So that's just going to keep everything lingering for longer, and probably interest rates probably remaining where they are. FEZ, the Euro Stocks 50 ETF pulled back down 1.67%, entered the Ichimoku cloud. So we've got a lot of bearish things happening here with the FEZ ticker symbol for the Euro Stocks 50. We've got the faster moving average crossing under the slower one. That's negative. Price was under both of these moving averages yesterday. I mentioned that. And now it gapped down, but look, it found support at that 57.67 level. So that's one positive, and we can find that going back over here. We can see that price stalled at this level here. IBIT, by the way, let's look at the weekly on that one too. On the weekly, it's under the Tenkan currently, all right? And there's a number of support levels, but this is not positive by any means. IBIT is Bitcoin Trust ETF. This one's declining. It's under that trend line still. Interesting, isn't it? Down 0.08% today. The Bitcoin ETF. And then we've got the stocks from CNBC that they talked about. We're going to look at those 11 of them, not all of them. Let's start off with the strongest ones. JP Morgan, still looking pretty good. This one was down 1.13%, but held up above the Tenkan and Kijun. The volume was a little bit higher today as well. So, but overall looks good in the daily, and it still looks strong on the weekly chart as well. I had a position in this back here. It closed out of it back on June 30th. I haven't got back into it. Then we got Dominion Energy, and all the trades that I place, I share with Blue Cloud Legend level members. Consider becoming a member. There'll be some information at the end of this video on how you can become a member as well. It's real easy. But just briefly, you just come to my homepage. You click on the subscribe plus button after you've hit the subscribe button, and that will bring up this page here, and then you can find out some more info at the end. All right, let's get back into what we're talking about here. Dominion Energy. So this is utilities. Now, by the way, I just mentioned earlier, utilities looking pretty strong overall. It's one of the few sectors that is doing okay. All right, XLU, for example, and here it is, looking pretty strong, up 0.54% today. Here it is on the weekly chart. All right, so I do like utilities and utility stocks right now. WHR, Whirlpool Corporation, on the other hand, no thanks. Look at this. It's dropped. It got under the Tenkan. Like I said, that's the first sign of weakness right there. It doesn't mean that a stock is broken completely, but once price gets under the Ichimoku cloud on both the daily and the weekly, there's trouble. Let's see where this is on the weekly chart. I'm going to guess, yeah, it's under the weekly, on the cloud, under the cloud on the weekly and on the daily chart. So this is not a good place to be. And it looks like the momentum is increasing. This is a reversal candle. It's called the Gravestone Doji. If it happens after a drop in price, sometimes that could potentially lead to a reversal, but there are no guarantees in that. That kind of looks a little bit like, let's see if I can find that candle for you. Right there. So Normally, it can be a bearish candle if it happens at the top of a move, okay? But if it happens sort of like after a drop, it kind of looks a little bit like this right here, like the inverted hammer, or if this was kind of like flat, that would also be a reversal candle. All right, let's go to the next one. UPS. No thank you on that one. Down 1.17%. Here it is on the daily under the cloud. I would skip this one altogether. CMG. Chipotle Mexican Grill coming back down and going to retest that trend line. Goes back, to these dates here back in August of 2024. And the other, basically it's based on this downward channel that you see right here. So maybe it will get a bounce here because it's dropped so much, but I wouldn't take that chance. There's no confirmation on the Ichimoku. Whoops. Nike down 2.6%. All right, so that one also dropped today, and we're looking at the closing price right there. On the weekly chart, it's still under the Ichimoku cloud. I would not touch this one either. It's an interesting little note there. Brian Belsky back on June 27th still has a position in this stock. Thinks this might be a turnaround. It could potentially be, but look what happened here. It found resistance right at the cloud, and although it's been showing a little bit of strength here, it's still under these prior, right there, under that prior high right there. So I wouldn't touch Nike right now. SBUX, Starbucks, dropped. It closed down 3.88%. Okay. And it's still under the Ichimoku cloud here on the weekly, looks like, and on the daily chart, it's entering the cloud. So no on that one. Under the 200-day, I'd stay away from that one. For now, it might have its day in the future. Shake Shack, I'm sure it's a big disappointment for Josh, because I know that he had a position. He also mentioned this as his final trade at the end of the show, down 14.6%. Now, this one, their next earnings are on October 29th. Came down, found support at the 200-day moving average. And let's look at the weekly chart. It's finding support at the top of the cloud. So from this point, you have to determine how you want to play this. If you want to hold in the position until everything starts to break down with the Ichimoku on the weekly and daily, it's really up to each trader to make that decision for themselves. But I would certainly not be adding a new position here. Okay, this is not the time to be adding, because there could be further weakness. PayPal also inside the cloud here on the daily. Here it is on the weekly chart under the cloud. No on that one. AEM is a position that I've held, or a stock that I've held a few times. This one here, I don't have a position in it currently, but it's moved up quite nicely, hasn't it, since the last time that I held it. So this has been a good stock. I tend to pick stocks that are strong on both the weekly and the daily time frame. Right now, this one still looks pretty good, except for the fact that you can see that it did close under the Tenkan-sen, but it was actually up 0.8% today. So gold, it's not a bad defensive play in this environment, in my opinion. ETD. Although, I will say this, if we look at GLD, for example, real quick, you'll see it's still inside that Ichimoku cloud, okay? All right, let's look at ETD, which is Ethan Allen Interiors, Home Furnishings and Fixtures. On the daily chart, it's under the Tenkan-sen. It's kind of stuck in this little consolidation area here. On the weekly chart, it's still very weak. Under the cloud. Notice how it likes to test the cloud, doesn't it? Price came up to the top of the cloud and reverted right back under. Came back up to the top of the cloud and closed under. Right? So these levels are certainly being watched, that's for sure. Let's keep going. How about Meta? Up 11.25% at the close. And let's see what it looks like right now after hours. I'm curious. Post-market. Okay, it's 11.08. So that's interesting. So Meta looks very strong. Obviously, it broke through that 740.91 level on the weekly. The thing with this candle, though, is let me just delete that. Sorry. So as you can see, it gapped up today, right, from yesterday, from Wednesday, it gapped right above that 740.91. Kind of unexpected, but that's what happens when earnings announcements take place, right? The information came out after hours, and boom, it popped. So it's up 11.25%. I don't have a position in this, but at this point, what would I do here? I probably would not be thinking about adding unless I can see continuation above that candle right there. All right. The problem is it's a reversal candle. It's a spinning top. Also not conducive to a continuation, but we'll see tomorrow what happens, I guess, with Meta. You know, today it should have just continued moving up. It should have created a more bullish candle. Instead, we get this type of candle. That's indecision right there. How about Apple? At the close, Apple was actually under the Tenkan-sen, under the Kijun-sen. It was looking pretty bearish because we didn't have the earnings announcement information yet. Let's see what it's looking like now. Boom. Okay, so it did pop, but then look, it created a shooting star type candle. It's only up 0.37% after hours. So that is not as exciting as you might think. If you look at the 5-minute chart, this is what it looked like. Okay? And then we've got this on the 5-minute after hours, because it's after 4 p.m. here. You can see that's developed that bearish engulfing pattern, like the one I told you earlier. And now it's dropping. So that you can get those patterns on any time frame that you look at. There's a 5-minute, here's a 10-minute. Okay? Here's a 1-minute. If you want to see what Apple looked like right after the earnings announcement. Probably happened around this time right there. Boom. It spiked. And then it's pulled back. So Wall Street's not liking something, in my opinion. Of course, they might need more time to process and digest that information, and then tomorrow might be a different story. How about Tesla? After hours, Tesla, this is post-market, it's down 3.5%. Where was it at the close, though? Okay, it was down 3.38. So, yeah, Tesla's not a place that I'd be wanting to jump into either. You can see we've been in this long extended downtrend here for a bit now. And here it is on the weekly chart, stuck under the cloud still. All right, continuing on, we've got a few members' requests. Let's look at eBay. On the weekly chart, look at that. It looks pretty awesome. The 81.19 level is that purple line right there is a monthly level. I'll go back in time so I can show you. Goes back to this date right here. Whoops. Right about there. The high there was 81.19, and that was back in 2021, folks. October 29th of 2021, that was the high. Now, since that point, price had dropped over 50%, and it's recovered, and it's breaking that prior high from 2021. So here we are. There's the weekly chart. You can see that it found resistance around that 81.19 in the past, pulled back, came back, retested, stalled, and then got above it. Here is the daily chart. So on the daily, I kind of like this candle a lot more than I would a spinning top, for example. I think this has potential, but I would still, it still has gotten a bit far away from the moving averages right now. The closing price is about 7.7% away from the moving averages. It's not necessarily a bad place to take profits when you see a big jump like that, 18.3% in one day. Or you can wait until tomorrow to see where price is going to be. Is it going to be staying within the body of this candle? Right? Will it stay within this range, or will it get under it? If it gets under, expect it to drop down and retest this level. If it gets above the high of that candle, expect it to continue, in my opinion. Of course, you could also just continue just building some more candles here, creating a base, and then take off. So we'll see what happens. But yeah, I would not be, I don't know. I'm not giving any advice here on what any individual trader should do. It's really up to you. SLVR is the Sprott Silver Miners and Physical Silver ETF. This one has been pulling back now since July 23rd. This high right there. It's pulled back a bit. Now, it's gotten under the Kijinsen. If you look at this, the structure of this, though, overall, and yes, it has in fact also taken out, I'll show you guys this low here, and it has developed a slightly lower high here. So technically speaking, this is in a small downtrend. I don't know if this is going to be a short-lived, kind of like maybe a bear flag type situation. Okay. Possibly. And then price, comes closer to the cloud and bounces here. It has not taken out this low. So I would not be adding any new positions here, but here's the weekly chart. It's under the Tenkan-sen right now on the weekly. But Friday we'll know for sure where this ends up. Gold and silver could potentially have a nice bounce tomorrow if the markets start to decline. It's kind of a hedge in a sense. All right, let's take a look next at some of this. I guess some of the sectors, not all of them. We'll look at Bitcoin, U.S. dollars at 116,434 under the Tenkan-sen. You got technology, XLK still holding up barely above that Tenkan-sen. But what does it look like now, post-market? Let's take a look. Okay, so it did come up a little bit slightly. So that's positive. What about utilities? Closed up 0.54%, very strong. Materials declining. COPX, copper miners, bouncing off the cloud right here, but still under the moving averages. GDX, the gold miners ETF, is just stalling on the cloud. Communication services, it gapped up but then closed under the Kijinsen. Bitcoin, we already talked about that one. IBIT is still under that trend line. SMH closed under the Tenkan-sen. That's the semiconductor ETF. Gold inside the cloud still. Real estate entered the cloud. So it was above the 200. It's gotten under. Real estate is starting to show some weakness here. Down 1.76%. Probably because interest rates are probably going to remain where they are. Oil K. ProShares K1 Free Crude Oil Strategy ETF down 1.58%. XLY Consumer Discretionary dropping down 0.79. We got XLV here, healthcare under the cloud, no on that one. XLP inside the cloud, that's consumer staples. Industrials looking kind of weak here too, a little bit. Even though it says up 0.01%, it's under the Tenkan-sen for a second day in a row. Financials also closed under the Tenkan-sen 2 days in a row. Energy holding up above the moving averages here on the daily, but on the weekly chart, it's still under the cloud, so no on that one. XHB, Home Builders, is under the cloud still on the weekly. GDXJ is under Tenkan-sen this week, as you can see. It's most likely going to stay under Tenkan-sen. Here's the daily chart. It also closed today under the 64.92 level. Let's take a look at the U.S. dollar, too. I'm just curious to see what that looks like. U.S. dollar has been showing a little bit of strength on the daily chart. So you can see that it broke through the Ichimoku cloud here. The cloud has turned bullish. It broke through this high, and it's developed a higher low. So this low is higher than the prior one. And we took out these highs. Now, the problem is it's embedded under the cloud on the weekly chart. It's been under here, and this is, yes, it's been a strong week for the U.S. dollar, but look how close it is to the 200-day moving averages. It's only 0.83% away. And then the Kijinsen 26 period is there. So I would not get too excited here. Anyway, that's going to do it for this video. Stay tuned for a quick little video clip about how you can become a member and how you can get free access to that cheat sheet right here. Okay. All right, guys. Have a good rest of the evening. If you guys want to have access to this candle cheat sheet, as well as the patterns cheat sheet, this one here that has multiple patterns in here, you can get it for free on my X page right here, Blue Cloud Trading. You'll find me under the handle on Twitter of @BlueCloudTrader. All right. And then what you need to do is, once you're on the page here, go to the highlights tab here. and then just scroll down a little bit, and that's where you'll find it right here and there. Okay, so that's how you can find it. And if you guys like the the videos that I'm producing here on the channel and you want to support the channel, one of the things that you can also do is when you're on the homepage here, you can click on the subscribe button. All right, and then once you've subscribed, a new little thing will pop up. It will say the plus button. So then you can also subscribe to join as a member as well, if you choose to. And you can become a Blue Cloud supporter, and you can request a stock to be, or ETF to be analyzed on the show. Blue Cloud Trader, this is where you get access to the exclusive member-only videos that I produce. And I go over my entire portfolio. I go over the strongest stocks. And I actually provide 20 stock ideas for the upcoming week, every weekend. And that's really important because we're looking at the best stocks that have excellent technicals on the weekly and daily time frames. And then if you want daily updates on my trades, Blue Cloud Trade, I do a post every day. And let's see, daily trade updates. There it is. Okay. There's also some day trading videos. You become a Blue Cloud Legend level member. So there's 3 tiers. You can choose which one is you're interested in. And basically, once you've become a member, there'll be a new tab that pops up right next to the posts. It will look like this, membership. You click on that, and you can access those posts. If you scroll down further, that's where you can find the member-only videos on my homepage. Real easy. Okay, let's get back